The Russians and the Chinese have gone on a gold buying spree. Global central banks, especially those in Russia and China, have been boosting their gold reserves at a rapid pace lately. The trend is projected to continue due to trade tensions and market uncertainty. Hello and welcome back to Wealthy Mind. Before we dive in, make sure to click the like button, subscribe, and turn on the notifications. This 1-second action will really help us grow so we can bring more videos for your pleasure. Alright, let's get started. Schiff, a Manhattan investor and precious metals dealer who is known for being bearish on the US economy and the dollar, said he thinks the Russians and the Chinese are preparing for an impending dollar crisis.
Why Russia has moved 2 planes full of gold from Venezuela. Why a full plane from Switzerland flew to China with gold.
Yeah.
You know.
And well, some of these countries now don't trust having their gold stored by third parties.
Yeah.
They want it themselves.
That makes sense, Peter. That makes sense because I didn't put the 2 and 2 together at the time when I came across that info. Only to find out last week that Russia is working on dumping the US dollar.
Yes.
They are moving into that direction. So could it be?
Yeah, I mean, I tell all my clients, you don't want to be the last one on your block to sell your dollars. You know, you got to get out early.
Wow.
Wow. That's very interesting.
Yeah.
I didn't realize that back at the time when I came across that info, because I had some of my contacts that I talked to in Europe, and I was like, it just didn't dawn on me at the time, Peter. That's so your explanation makes perfect sense to me now as to why that is. So.
Well, so go ahead.
No, you go ahead.
So. Because we have a really global audience, one of the things that we're interested in, and I would love your opinion on this, Peter, is, the US is going through a lot of these financial woes, let's call them, but that affects the entire global economy. So how do you see it impacting the Chinese economy, the Russian economy, and sort of the global economy as a whole as all of this shifts around? Because we are seeing countries like Russia, for example, trying to get away from the US dollar. So how does that impact everyone else? And how do you see that maybe reshuffling? And does the US dollar lose reserve currency status? What do you see happening there?
Well, it's totally going to upend the current economic system where Americans, really sit in an envious position. We are the major beneficiaries of the dollar's status because it enables us to live beyond our means. We can import all these goods without having to produce them. And, it's expensive to produce goods. It takes real resources and, creates pollution, right? So we get the benefit of all these factories without actually having to deal with them. They're in some other country.
Yeah.
And because we have the reserve currency, we can borrow a lot of money, but we don't have to save much money. And the borrowing, and spending, that's the fun part. The saving and producing is the hard part, right? So we just get to do all the fun stuff. And the world is doing all our heavy lifting. So, when the dollar crashes, and it will crash, then our whole standard of living is going to implode with it. But as bad as that's going to be for America, it's actually going to be a relief for the rest of the world, because the rest of the world will no longer have to bear the burden of supporting the U.S. economy. So the rest of the world will have more stuff to consume, and they'll have more of their savings to invest productively in their own economies. They won't be lending as much to us. So they're going to reclaim their savings. They're going to reclaim the consumer goods that they produce. So the rest of the world is going to get to have more, and America is going to have to make do with a lot less.
Russia and China have been constantly stockpiling gold in recent years to shift their growing international reserves away from the US dollar. They are currently the world's biggest purchasers of metal. China has been buying gold as one way to gain leverage in the trade war. They can strengthen the yuan by selling dollars and buying gold. China's recent market crisis might force China to change its monetary policy. And Peter Schiff believes the Chinese government is laying the groundwork to back its currency by gold.
So real quick, will they react to this by changing their monetary policies at long last? And what is the possible short and near-term effects for America?
Well, eventually that is going to happen. This has been something I've been forecasting for years. The timing is difficult. I guess only the Chinese know, and maybe even the Chinese don't know when they're going to do this. But I do think that quietly they have been increasing their ownership of gold. We don't really know how much gold they have, but I think it's significant. They haven't reported their numbers in years. I think it's because they don't want the sellers of gold to know how much they're buying, because they obviously want to buy it as cheaply as they can. But I think they're doing this for a reason. I do believe that they do want to untether their currency from the dollar, but they don't want it to just be backed by nothing. So rather than have it be backed by dollars, which really is tantamount to backed by nothing because the dollar is backed by nothing, but to back their currency by gold. And at one point, all paper currencies were backed by gold, right? And if the Chinese were to back the RMB by gold, they would have the only gold-backed currency on the planet, and it would probably be the most desirable and the strongest currency, and will replace the dollar as a world reserve currency were they to accomplish this.
The world has been on a dollar standard ever since the US led the world off the gold standard. This wasn't a problem when people perceived value in the dollar, but that's going to change in the next recession.
I don't think we're going to have another crash like the 30s, but that doesn't mean you don't have to worry. Because during the 1930s, we were on the gold standard.
Okay.
We don't have that benefit anymore.
We do not.
And so the market can still crash as much as it did in the 30s if you measure it in the price of gold. So I think in terms of gold, and gold's around 1,800 an ounce right now, and the Dow's around 36,000. But if the Dow crashes to the point where it's worth 1 ounce of gold, which is what happened during the 1930s, you know, you got by about 1932, you know, the Dow and gold were about the same price. That could happen again. And maybe it happens with, you know, the Dow at 50,000 and gold at 50,000. But if the Dow and gold are the same price again, the Dow crashed. I don't care, you know, what the nominal price is. Because see, this time around, it's the dollar that's going to crash. Right? So if you're simply measuring the value of stocks with dollars, you know, if the dollar itself loses a lot of value, then, you know, it may look like the stock market's gone up. It's like if you're 6 feet tall and I give you a ruler that only has 6 inches in it, and now you measure yourself, it doesn't mean you're 12 feet tall. You got to look at that ruler. I've cut the ruler in half. Your height hasn't changed. It's the ruler that's changed. And so now you're taller because a foot now has 6 inches, right? So if the dollar loses a lot of value and then you go and try to price stocks, well, obviously the price is going to go up when you're measuring stocks with money that's worth less. Gold is an objective measure of value. That ounce of gold doesn't change. The government doesn't print any gold. So if you really want to know what's happening to prices, you need something like gold as an arbiter. So you can look at it through a lens that doesn't change. And if you do that, you will see a crash in all of these overpriced assets. And, you know, and the way Americans will see that crash, right? Your stock market portfolio, maybe it doesn't go down, or maybe it goes up, maybe it doubles. But when you go to the supermarket, everything is 10 times as expensive. Right? Your electric bill is 10 times as expensive. So if your stock portfolio has doubled, but your cost of living has gone up 10 times, your stock portfolio has actually lost value. Because its ability to help, you know, offset your cost of living has been diminished. The real value of those stocks has gone down relative to all of the goods that you want to buy. Because when people invest in the stock market, nobody buys stocks because they want stocks. They don't hang the certificate, you know, on a wall and admire it. People are buying stocks because they hope they can sell them at a profit or take the dividends and then go out and buy stuff.
Right.
It's the stuff that they want. Stocks are just a means to get you more stuff, right? So, but if the price of the stuff you want is skyrocketing compared to the value of the stocks you own, you're getting poorer, not richer.
As its name suggests, the term gold standard refers to a monetary system in which the value of the currency is based on gold. A fiat system, by contrast, is a monetary system in which the value of the currency is not based on any physical commodity, but it's instead allowed to fluctuate dynamically against other currencies on the foreign exchange markets. Peter said that the dollar will be sacrificed to prop everything else up. The world is going to reject the dollar standard and go back to the gold standard. That's where we are going. Gold beats all these fiat currencies hands down. And so gold was the reserve before the dollar, and it will be the reserve after the dollar. That's the only monetary system that works.
Peter, do you think gold will return as the primary monetary reserve? And I'm asking this because fiat currencies, they give governments the unconstrained ability to print as much money as they want, spend as much money as they want. Why would politicians and governments want to give that up?
Well, it's not about wanting to give it up. It's going to be about having to give it up, right? I mean, that's, when their backs are to the wall and they don't have a choice, that's what's going to happen. I mean, once the public loses confidence in a fiat monetary system, how do you reinstill that confidence? I mean, gold is the answer. And what I think is going to happen before the United States goes on a gold standard, because obviously I think we have the least amount of incentive to do that, right? Because, the dollar is being used instead of gold. So, but what I think is going to happen is all the other nations of the world that have been using the dollar instead of gold will just start using gold again instead of the dollar. Go back to the way it was before the dollar replaced gold as the primary reserve. And again, you have to remember, the reason that we were able to convince the world to switch from gold to dollars is because the dollar itself was not only backed by gold, but redeemable on demand in gold. So the dollar was as good as gold. In fact, it was better because you could take your dollars and then loan them to the US government by buying treasuries. And now you got interest, right, which you didn't get on your gold. So they had the best of both worlds. They had gold and they had interest. And so this is what happened. But of course, we abused that privilege and we started printing too much money. And then we defaulted on our commitment to pay real money for our IOUs, to pay gold for Federal Reserve notes. The dollar was marked down, but it wasn't, knocked out. I mean, the world continued to accept dollars and hold them as the reserve, just at a lower exchange rate than the one that prevailed previously. There was a big drop in the dollar during the 70s against the Deutschmark, the Swiss franc, the yen. Gold, of course, was revalued, or as the dollar went down, gold went from $35 an ounce to $850. Oil prices went from $3 a barrel to $30 a barrel because we devalued the dollar by severing its link from gold. And so now we had a dollar backed by nothing as opposed to a dollar backed by something. But of course, in addition to having the dollar as good as gold in 1971, back at that time, or even before that, rather, when Bretton Woods was enacted, right after the Second World War, America was by far the most powerful economy in the world. Industrially, we were the biggest manufacturer and exporter of manufactured goods. I mean, all the cars, all the consumer electronics, all the appliances, right? All the stuff that's now made in Germany or Japan. Of course, they made nothing back then because they were decimated in the war. We owned all of those big industries. So anybody in the world that wanted something had to buy it from America. We made everything. We had the strongest economy. We paid the highest wages. We were the world's biggest creditor nation. Everybody around the world owed us money. We had investments all around the world. We were collecting income on those investments. Biggest creditor nation on the planet. And we had almost all the gold, right? Today, fast forward 2020, the biggest debtor nation on the planet. We owe more money than all other debtor nations combined. We owe money to everybody. Our industrial base is imploded. All the industries we used to dominate, we've lost. And now we're importing with IOUs what we used to produce ourselves, not only produce enough for our own consumers, but enough for the rest of the world. Now we're just importing what everybody else produces. And we're printing money like crazy. Powell is saying that we need more inflation. Interest rates are at zero as far as the eye can see. The Fed's not even thinking about raising interest rates. We don't have enough inflation. So they're going to destroy the dollar. So you're a foreign central bank and you're like, all right, our currency is backed by what? By the dollar? What's that backed by? Nothing? And they're just going to keep printing them and printing them and printing them, because if they stop, the whole house of cards in America comes collapsing down. The only way to stop the stock market, the real estate market, the bond market, the whole economy from imploding is to keep debasing the dollar and creating inflation. You can't do that and be the reserve currency. So the world is going to leave the dollar. Just like America went off the gold standard, the world is going to go off the dollar standard. Now, a lot of people think, well, that's never going to happen because, hey, how do you go off the dollar standard? Because what currency replaces the dollar? You can't use the euro or you can't use the yen. Yes, I get that. But what these guys miss is that you don't need another currency to replace the dollar. Why repeat that mistake and just, give another country the ability to abuse the privilege, right, that America abused? Just go back to gold. We don't need a reserve currency. We need reserve money. Currency needs to be backed by real money, and that's gold, right? And that's what's going to happen. So gold's going to be remonetized. But before it does, buy it. Buy it now before all the central banks are competing to buy it. Buy it now before all the big pension funds and hedge funds and the endowments and all these guys are loading up on gold because they don't have any yet. And they're going to have to buy it. And the price is going to be much, much higher because we can't go back on a gold standard at $2,000 gold. It's impossible. Not unless the price of everything else crashes, which could happen, but I doubt. So instead of having the price of everything else collapse, the easiest path is just for the price of gold to go up. And that's exactly what's going to happen.
In an interview, Schiff told the Gold Investing News that publicly, central bankers talk about why they don't like gold or think it's a barbaric relic, yet they apparently want more of it. It's a trend that he believes will accelerate as central banks figure out that fiat or paper money needs something behind it, something tangible. Schiff firmly believes that the global monetary order on the verge of reset, which means a collapse of the fiat-based system where the dollar is at the center and other currencies are backed by or pegged to the dollar, and the dollar acts as the primary reserve asset. That system has produced enormous global imbalances that are straining the global economy. Ultimately, Peter thinks that the whole thing gives way and what returns is what existed prior to the dollar standard, and that is a global gold standard, which is the only thing that really works. That's it for this video. Be sure to give us a thumbs up if you enjoyed it. Also, don't forget to subscribe to always catch our videos. We'll see you in the next one.